All right, we're back for another partner chat time.
Yeah, but it's dark out now at the daylight
I
savings
know,
time.
I know, I know. Let's see. So we're recording this on Monday, November 9th at 6 o'clock, and it feels like tax season,
Yeah,
but it's dark out and we're still at work. Such a bummer.
yeah, yeah,
Big news over the weekend with the election being called by the major news outlets. I don't think it's. I heard what agency or what office has to announce it for it to be official, but
mhm.
that hasn't been done. But it sure sounds like for all intents and purposes, it's a done deal.
Yeah. It seems that way.
Trump is fighting and filing some lawsuits, but it sounds like even the number of votes that they're specifically asking for in these
Uh,
lawsuits really wouldn't change anything anyway.
yeah, and it sounds like key advisors are kind of advising him to kind of bow out. It seems like.
Yeah. So I think it'd be good for us to kind of talk about Biden's tax, proposals that he's talked about, and
Yeah,
what potential changes might come. I know that on the gift tax side of things, this is where I've seen a lot of people already taking action, just feeling like I might as well take advantage of these really high gift tax
yeah,
exemption amounts while I can.
and
Uh,
I think it's worth mentioning if I can
yeah,
step back and say, just because the president elect has a plan doesn't mean that any of these would be placed in service, I guess. I mean, it would still require, full congressional approval for any of these to
right.
get passed and to be implemented.
And at this point, it sounds like the Senate didn't change control. I know there's Georgia and some states are going to do a recount,
Yeah.
but it sounds like in all likelihood, the Republicans are going to retain the Senate.
Yeah, I don't know what happened if Georgia flips. I'm not positive on that, but I don't know the likelihood of that. But anyways,
But the bottom line is at the moment, as we sit here, we're going to have divided
hmm
legislature from the executive office, which probably means nothing is going to ever get done.
right, probably not. Yeah,
So with that being said, we've got this, we're just looking at taxfoundation.org. They've got a list of Biden's tax plans. I thought it'd be good for us to just kind of go down that list of things that he's proposed. So the first is um, increased Social Security tax. So this would be on wage income, or I suppose self-employment income, anything subject to self-employment, um, only on income earned over $400,000. So there's this donut hole that they're describing where
right,
Social Security is normally assessed on wages up to 137,000. I think the
right.
2021 limits are 140 something. But then there would be this gap, and then at 400,000 and above, then it would be
Right.
subject to that Social Security tax of 12.4% again.
Yeah. Yeah. So you'd have this situation where it's like I'm subject to it up to 137, then I'm not, and then now I'm back to subject to it
Yeah,
again after 400,000.
yeah. That's something I've never seen in my career. I think with when uh, Obamacare went into place, the net investment income tax and the additional Medicare tax, the 3.8% portion of
Right.
Social Security, they started, for lack of a better word, playing with that by increasing the income limit that 3.8% is subject to. And
Yeah.
now this is going to complete that up with that additional 12.4%.
Sure. Yeah. Absolutely. I guess the next thing would be top individual tax rates for income above 400,000. Currently, it's 37%. That would be increased to 39.6%, which is kind of pre-Tax Cuts and Jobs Act. So prior to that, I guess prior to 2016, that was our highest tax bracket. So it goes back to that level.
Yeah. It's funny. I don't know where that 39.6 ever came in, but that's a rate that has been the top rate off and on, it seems like over the last 15 to 20 years. So,
Yeah, yeah, for sure.
um, and then, basically taxing capital gains and dividends, qualified dividends, at the ordinary tax rate instead of the low long-term capital gains tax rates on income over $1 million.
Right.
So that's that's a pretty hefty increase in tax. I
Yeah.
suppose, people selling stocks and things like that, that may be a small portion of their income. But, if you have a transaction where you sell real estate that you've, held in your family your entire life or something like that, that's probably going to be a pretty significant increase in tax.
Yeah, you go from essentially a cap of 20%. I mean, that's doubling almost
It's doubling it. Yeah.
that tax. The funny thing about that 39%, 0.6% is, you probably remember this, but what was it back in like 98, 99? Remember there was a 28% bracket, I think, at that point on dividends or on qualified dividends for like a couple of years before
Yeah.
it went all the way down to the 15 to 20%.
Yeah. The next one is really odd, this capping of itemized deductions.
Right.
So, the next two are both basically limiting itemized deductions. And, the calculation of this is going to be crazy. But
Right.
the first limit is, well, actually, I'll talk about the second one. This basically going back to the old P's limitation on itemized deductions, where you basically phase out your itemized deductions when you're over a certain AGI limit. I think it was, if I remember correctly, it was like 3% of your AGI is reduced from your itemized deductions, something along those lines.
Yeah, it was something like that.
Something complex. And then under this proposal, they would limit the value of your itemized deductions to 28% for those earning over $400,000. So it's hard to describe this, but basically they're saying, we're going to give you a deduction, but only up to 28%, only assuming you're in a 28% tax bracket. The rest of your income that's taxed at the rates higher than that, you're not going to get benefit of the itemized deductions.
You're not going to get what?
The benefit of the itemized deductions at the full rate.
Yeah, so you'd still get a 28% regardless, I guess, of that. If your income was $1 million, obviously you're above that. You would still get, if you donated amounts, it would still give you a benefit just at 28% benefit.
Right.
And I was thinking about this over the weekend because I did see this plan and I was kind of wondering, like, for taxpayers that made above that 400,000, would they want to just start giving money away to charity? And then I was concerned of like, wow, it could be this double whammy where they can't even give it away and get a full benefit. But they do get some benefit. It's just a reduced benefit.
Right. Yep.
About 400,000.
That's right.
The next one is the phase out of the QBI deduction, the 199A for filers that have income above $400,000. I mean, we've seen, so that's a 20% deduction on flow through income from partnerships or S corporations. And that's been a huge benefit to our clients that we've seen them get, been able to get $60,000 in deductions, if they have considerable flow through income. And so that essentially gets eliminated.
Yep. Or phased out at that income level.
Yeah.
And then there's, expansion. So I think up to this point, we've talked about increases in tax. One of the things, by the way, in that area that we didn't chat about was this elimination of step up in basis for capital gains taxation. I don't really understand the details of that, so I'm hesitant to.
That's why I was like, okay, he's not going to touch it. I'm not going to touch that either.
But that is significant. We obviously need to understand that, again, all of this is just proposals anyways. If something gets put into place, we'll understand it, obviously. But that would be a significant tax. But so anyways, moving on from that.
That is a big deal. And what I think so if I can mention that, I think it's worth mentioning. If there was an elimination of the step up in basis, obviously that's a huge impact for clients that are inheriting property. from their parents, that usually you get that step up in basis to the fair market value. I think the other side of that, and I'm not sure how these fit together because usually they do, is they're gonna expand the estate and gift tax by taking the exemptions back to the the 2009 levels, which is $3.5 million. So if a person passes away and they have an estate that's above $3.5 million, they're going to pay estate taxes of a 45%, I think I saw, which is a huge factor in the fact that we're dropping from the 10 or $11 million down to $3.5 million per person. That would be a huge change, and I'm not sure how that whole step up would fit in there.
Yeah, it's always interesting the not to bring an opinion to this, but it's always interesting how the estate tax is always one of the first things that's debated in these kind of differences of opinions as to philosophy on taxation, and yet it's been a long time since I had heard this statistic, but it was like 2% of the tax revenue that comes into the government is estate tax,
right?
Estate and gift tax. So it's always first and foremost in the arguments and debates, and yet it's not a significant revenue generator for the government. Again, that's a old statistic, so I don't know what it is now. I would venture to guess probably even less, since the estate and gift tax exemption is so huge right now.
But with the levels being as high as they were, I mean, we were not preparing that many 706s, which is that estate and gift tax return. I mean, if it's at 3.5 million, that's gonna lump in 10% of our clients, maybe. I mean, that's a pretty big number.
Yeah. So next is just expansion of benefits or credits to taxpayers who need that. So expansion of the earned income tax credit, the child and dependent tax credit. So this is a credit for expenses you incur for child care so that you can work full time. That increases that up to a maximum of $3,000 from $2,000. Reestablishing the first-time homebuyers tax credit. So that's a help to people who are first-time home buyers.
It's a drop in the bucket for California. It looks like it's $15,000. What's that going to get you, like escrow fees or something like that?
Yeah, well, every little bit helps, that's for sure.
I'm just hoping now that maybe the child independent care credit, for my 16-year-old daughter, if we have somebody to help take care of her, maybe I can get that.
Yeah. All right, and then some business tax changes. So the corporate tax rate would increase from 21% to 28%. It's interesting. I haven't heard anything about that tax rate being graduated at all. It's just flat 28%. It's funny how that went away in the Trump 2017 tax change, and it's nice and simple. So from my standpoint,
right,
it makes it easy to do some calculations.
Yeah, so you wonder if it is because pre 2017 it was there was various levels, and now it's just a flat 21, and then could be 28%.
Yeah. One of the other interesting things is this potential doubling of the tax rate on the global intangible low tax income, also known as GILTI. Wow. The GILTI tax.
I'm impressed that you could do that and say that.
This was the change of the 2017 tax act that encouraged these corporations, big corporations, who have global earnings. So that think of Intel with income in Ireland that they don't repatriate. It just sits in Ireland, or Apple. Apple's probably the better example. Money just sits in Ireland at these low tax rates, and they don't repatriate the money. This low tax rate on this GILTI tax incentivizes these corporations to bring this money back, and in theory, put it to good work here in the U.S. versus internationally. So it's
Yeah.
kind of interesting, the doubling of that tax rate.
I think,
Will probably disincentivize companies from bringing money back.
yeah. I think the one thing as I look through the business tax changes that I don't see on there that I'm pretty surprised is like the elimination of like the bonus depreciation and the section 179 limits, So currently, I mean, we've got clients or taxpayers that could take, bonus and section 179 of millions of dollars on assets that were placed in service. I thought I had heard that his plan would kind of eliminate some of that, but I don't see that here.
Yeah, that's the one area that
The loophole, remember that loophole that they kept talking about?
Yeah. That's the one area that I know that there's been a good amount of economic study that those benefits of upfront expensing of fixed asset acquisitions really does spur the economy really well. So I think that that's one area that there's kind of bipartisan support for the effectiveness of doing that, and that it generally helps everybody, not just kind of the big wealthy corporations. Anyways, so there's a manufacturing communities tax credit that reduces the tax liability of businesses that experience workforce layoff or a major government institution closure. That's interesting. Not really sure what the details are of that. And then, in a renewable energy tax credits, expanding renewable energy tax credits. Those seem like good ideas.
Yeah.
So there's a lot of other things that are general discussions that are probably not worth discussing in detail. And if somebody really wanted to read all of it, they can find it by Googling it. But yeah, it'll be interesting to see. I mean, so we're 3 days after these results were announced, and obviously we're very premature talking about this stuff. So be interesting to see what tax policies change and could change. So we're sitting here in November. I mean, I can't imagine, even if I think that Georgia recount will take about a month, I think they say.
Yeah, and that's going to be in January 5th, I think.
Yeah, so even if, so you've got the inauguration in January, even if there's a change in control, I can't imagine seeing any tax legislation passed that would be effective for the 2021 year.
2021 year.
Yeah. And that's just a guess. I mean, they do put things into place that are retroactive, but the further along you get, so if they get down to actually talking about tax reform and it's in the summer of 2021, it'd be hard to retroactively put that into place for 2021. So my guess, for whatever it's worth, which is not much, is it would be a 2022 change. And I think it's probably reasonable to expect some kind of changes.
Yeah. Well, it depends on what happens with the election, the Senate elections going on. Yeah. All right.
Just one other, on a totally different topic, one interesting thing to note is that the IRS expanded the amount of time that taxpayers can enter their information on the IRS website to get their stimulus payment. So for non-filers and filers who haven't received that stimulus payment, I think you've got until, I think it's November 21st to get your information entered into the IRS website. So I thought I'd just mention that in case anybody out there still hasn't got their stimulus check. If you don't enter your info, you don't get that check, it's still something that you'll be entitled to when you file your 2020 tax returns.
Yeah.
Anything else?
Nope.
All righty.
Sounds good.
Another week ahead of us. Hope everybody is well, and we'll talk to you soon.
All right.